The global crude oil scene has seen a significant shift in trade after Russia's invasion of Ukraine. While the invader was Europe's big supplier of hydrocarbons before hostilities cleaved it apart from the West, its export map has pivoted eastwards, with India and China its big customers now. Since the onset of the war in February 2022, Russian crude has grown to dominate the pie of Indian imports sliced up by source countries. Last week's aborted Wagner uprising against Moscow, however, led risk analysts to ask what a Kremlin weakened and exposed to further internal strife could imply for the reliability of its oil exports. That the world oil market gave up early price gains after the weekend turmoil in Russia suggests traders do not foresee any major disruption. Yet, India's risks are more direct. Given that we import 85% of our crude oil and a discount deal with Moscow underpins a significant bulk of these shipments, is it time to re-evaluate the strategy? Currently, there is no urgent need for India to shift from its reliance on Russian oil, which has been economically advantageous due to its affordability and payment in rupees. This has aided in managing India's trade gap and easing inflationary pressures. The West's stance on our oil relations with Russia doesn't significantly influence our decision. India's purchases have contributed to overall market stability after last year's war shock, preventing possible supply tightening that could empower OPEC+. The present scenario, with global crude trading under $75 a barrel, benefits India and other oil-sensitive economies, making a case for maintaining the status quo. Since Russia appears to have piled up more Indian currency than it needs for its imports from India, as reports indicate, we must admit that a regime change in Moscow could yet disrupt our bilateral trade ties if this aspect of it comes under review there. But then, in most such matters, hard interests usually come into play and it's difficult to picture New Delhi being let down by a partner of long standing. It is reasonable to expect that so long as the basic logic of the relationship works for both, it will survive. What Indian diplomacy could do is try nudging the US to rethink its sanctions-led approach to foreign policy. It has widened its arsenal of economic warfare in response to Moscow's aggression. It froze Russia's overseas assets, for example, and tried to isolate its banks as part of a financial onslaught, but could not choke off the Kremlin's war funding. It wasn't a realistic goal. Although the Wagner rebellion could yet set into motion events that let US sanction wielders claim success, we must ask whether the setback suffered by globalization was a price worth paying.